This is the last day of Q1. Yes, 3 months of 2021 are already behind us. I don't know about you, but that went really, really fast. I know I am looking forward to kind of this transition from dark to light I have been talking about. And if you are as well, I want to remind you that now is the time to learn your market. I believe what we are already starting to see as I talk to more and more real estate agents is that inventory is starting to come to the market. It is still being absorbed remarkably fast, but that is the start, right? We have been so depleted of real estate or available homes, existing home sale listings, right? A million, 30% lower than the previous month. So it's going to take a while for this momentum to kind of bring us back to a balanced market. And I just want to say, as I said in the title of this video, get ready. All of those channels who have been predicting, teaching, talking about a real estate crash, my suspicion is they are going to latch on to a headline that at first blush feels negative, maybe even really negative, and you're smarter than that. It is not negative at all. It is, in fact, if you follow what I talk about and I teach, you saw it coming. So here's the headline: pending home sales for the US, so a national number, down. Let me make sure I get it right. Oh, flip over the page. Sorry, I got so much notes this morning. Pending home sales down 10.6%. Get ready to hear that. A lot of these negative channels that just want to feed your mind with negativity are going to use that headline and spin some ridiculous story. The reality is, if you are like me and you look at the market, this is not news to you because, again, we have a tight search. We are running returns. We understand yield. And yes, activity is down, but it's all because of inventory. As we transition from this dark period to light, inventory is already coming. The consumers are predictable, right? As it is going to happen. People have been trapped in their homes. They have learned that space is good. People are going to want to upgrade. They didn't want anybody touching their stuff last year. It is going to be an amazing spring selling season. And as inventory comes out of this and we get going in the year, again, remember, we are sitting at an inventory level that is almost unheard of, unnaturally low. It goes back to the perfect storm I've been talking about for the last couple of weeks. The perfect storm is receding. And what we are going to see as investors, A, is the opportunity to learn, because the next 6 to 8 to 10 weeks, depending on your market, inventory is going to rise and it's still going to go pretty fast. As we get to like the hot summer selling season, like July, August, right, when the weather is warm, that's when I think inventory starts to get back to balanced in some markets, but not all. Some markets are just growing population, millennials, all of that, but know your market. And we're going to be able to do more deals because what's going to happen is we are going to see the best stuff go quick. Doesn't matter, you and I don't play there, but we are going to see the opportunities to do deals. And I go back to the fact that we are given, the Federal Reserve is telling us, without telling us, go get some 30-year cheap money. They are forcing it lower on purpose. It will be a short window in our history, but if you can lock up your first or your next residential loan with 30-year money, I think you're going to be pretty happy in a couple of years as your payment is fixed, as inflation kicks in and rent goes higher. So please, if you've ever thought about real estate investing, now is time to do the work. Go check out the playlist on my channel called Student Reviews and just get a taste for what they are doing every day. They are changing their financial futures. They are doing some amazing things. And of course, you can come back every Sunday and I report my impact score to see how many deals they've done, how many people are joining, things of that nature. So again, pending home sales down 10.6% month on month. They are also down 0.5% year on year. But again, with a record low inventory, what should we expect? Going back to other daily financial news we talked about, remember we talked about the ADP Jobs Report. Again, Friday's the number, right? And Friday's going to be interesting because the stock market's closed, right? Good Friday. But that's the number that's going to be market moving that will create, oh man, it could jump. It could jump bond rates, no doubt. 10-year note could go up on Friday for sure. But the ADP payrolls came out, 517,000 jobs. ADP is this private payroll service. It always front runs the important number. It's used kind of as an indicator, but it is off a lot. But again, it showed 517,000 jobs created. The previous month was 176,000. I think it was Monday we talked about over under of 400,000. Most of you took under, I think. Maybe I said 500. I think I said 400. But it looks like at least ADP, we're looking at over. What I found interesting is really two things. One, the part of the economy that was broken, hospitality, was the big winner. And this is why I'm telling you we're switching from dark to light. This hospitality sector that got whacked, crushed, whatever you want to say, it will come back fast. 169,000, I don't want to misstate, 169,000 jobs in a month. And it's going to be better next month. That's an amazing thing to say. 169 last month, it will be better next month. As we transition, as more and more of the country opens up, good times are coming. The other thing I found interesting is we saw the three levels of businesses that are tracked. They track companies under 50 employees, between 50 and 500, and then over 500. And each was winning. Below 50 was 174,000 additions. Think small businesses. That's awesome. We're going to have record grand openings this year. It's going to be amazing. It's going to be a year we feel good. Between 50 and 500 also grew and actually was the winner by count. 188,000 jobs created. And then big business, over 500 employees, 155,000. So each segment of the economy or business size was growing. Today we learn about more spending, more taxes. It is going to come. We're going to be spending. I think the Biden administration is going to split up this $4 trillion I've been telling you about for weeks and months. I think he's going to divide it into the easy to pass and then the hard to pass. My guess is he goes infrastructure, bridges, roads, kind of the middle ground where everybody agrees. Then the second bill is going to be his green initiative or whatever you want to call that. And let's be clear, because the Democrats won Georgia, he's just going to give up and he's going to do the budget reconciliation process. So he won't need a single vote from Republicans. That is what is coming to be expected. Of course, he won't say that, but that is coming. But again, as investors, I don't care about that now. That's already over. How can my family benefit? How can I get ahead of this? And again, I think inflation is going to be part of the day. Go get that 30-year fixed rate money. I've done more review of the budget reconciliation, and I had originally thought you could only do one a year. I was wrong. It's more of a timing, right? It takes time to do it. It looks like they could do at least two more, and they're going to probably rush and try to get three more done. This is all before the midterm elections because they may not have the majority that they have now. So I expect gobs of spending, another stimulus check. Oh my goodness, I couldn't imagine. But in the end, I think all of that is coming. I don't know if you saw an article in the LA Times, but the LA Times highlighted the number one real estate market in the United States, at least for rental growth, rent rates and all of that. And lo and behold, it is Fresno, California, source LA Times. Pretty crazy. Refinance rates were down again, even though interest rates came back a little bit. We got Matt, the mortgage guy, on later. I'll ask him about that. But again, refinances were down 3%, down 32% year on year. Ouch. Case-Shiller came out yesterday, 11.2% nationally, 11.2% price appreciation. That's a big number, right? Again, think about this, right? You own a 200K home, you put 20% or you put 10% down, your price goes up 10%, you've actually doubled your money. It's just the power of good leverage, good debt, fixed rate debt. Not to mention rents in Fresno, as an example, I have it here, up 39%. 4 years. That's amazing. Yeah, financially free, retired, good thing. Tillman Fertitta, something like that. He used to be on CNBC a year ago talking about all his restaurants. He's the billionaire owner of the Houston Rockets. He came out today and he says, I'm surprised at just how good March business is. They were caught off guard. Frenzy this summer. So when I hear him talk about caught off guard, what does that mean to me? It means he needs to go hire more people. Folks, that hospitality and restaurant sector is going to come back and come back fast. That is a good thing. It is a great thing. We are going to see monster employment numbers next month because I expect April to be a month we all smile. I think we all want this dark days behind us. So let's get to the light. Let's enjoy the springtime together and have some fun. What else we got? A couple of things. We got Chewy kind of reported better than expected earnings. Chewy is one of those businesses. Obviously, you don't know their online pet supplies. They are in kind of the perfect storm. A lot of people adopted pets. Shelters are out of pets. And again, they live for years or decades. So again, probably a good business to be a part of. And what else? Yep. Again, pending home sales was kind of my last thing. Again, these channels talking about a housing crash don't know what they're talking about. You can't have a housing crash when you have record low inventory. It will take months and quarters for inventory to build for quality differences. It will take a gigantic rise in interest rates to slow down. The reality is, as interest rates rise, people pull forward. So again, folks, this is going to be a good year. And the last thing I read right before I came here is CFOs, chief financial officers, actually see a great year. I'm glad they're watching this channel because, again, as you go from dark to light, it's an amazing feeling. Hopefully we feel a little bit better. We start being nice to each other. And if you're interested in real estate investing, now is the time to do the work. You get ready now and you stay ready. You don't get ready when the market is here. You'll be run over. So in the end, hopefully we get to talk to Anna this morning at 8. Sometimes her business is going gangbusters and we can't. But we have that expert series. We got Matt the mortgage guy later. Have a wonderful day, everyone. Today's a great day to make some money. And let's be better than yesterday. Bye-bye.